Hi, I'll be talking of the GDP data that was released yesterday. So we had first quarter FY17 GDP and GVA data that was released yesterday, and that was below expectation. So GDP came in at 7.1%, wherein the expectation was at 7.5%, while GVA was at 7.3%, which was in line with the consensus view. Looking at the breakup of GVA, we were slightly disappointed with the growth in the industrial sector, and within that it is the mining sector which was significantly below expectation. So that has come in at minus 0.4% versus about 7 to 10% kind of growth that we have seen in many last few quarters. So this has come in as a big negative surprise to us. The second negative surprise is in construction sector. This sector in the last 2 quarters has been growing at a rate of 4.5%. We were anticipating it to grow, something like 5% plus, but the growth that was recorded is only 1.5%, and this is again a big disappointment considering all the optimistic commentary that we get to hear from the government as well as from the companies in terms of the pickup in the road sector. My analysis is that this fall in construction activity is primarily being led by a drop in the residential sector. Going ahead, we would expect some pickup to come in construction sector, particularly in the second half of financial year 17. Apart from that, agriculture recorded a growth of 1.8%, which was marginally below the consensus expectation of 2 to 2.5%. We expect agriculture output to pick up in the second half because of the good monsoon that is underway. We also saw a sharp pickup in the government spending. So overall government spending has grown by 18%, which is a significantly higher number than what we have seen in the last many quarters. In terms of consumption, growth has come in at 6.5%. It is not very strong as we have seen in the last 2 quarters. Nonetheless, it is reasonably good considering that it is first quarter when generally consumption growth is on the lower side. Lastly, is investment, which has been a big disappointment again. So we have GFCF, which has grown by minus 4.5%. The last quarter growth was minus 2.5%. So not only that it continues to remain in red, but it is worsening, and this is a very negative sign and is concerning to us. Going ahead, overall for financial year 17, our GVA expectation is at 7.9 to 8.1%. We see downside risk to that now, particularly after the Q1 data that was reported yesterday. In terms of the investment, we would expect it to pick up slightly from the current levels. However, all in all, we expect it to remain sluggish over the next 2 years because we are expecting that government spending will taper in the next 2 financial year. In terms of private consumption, we expect it to pick up reasonably well in the coming quarters, and we expect it to remain strong even in the next 2 years. So we are basically of the opinion that all in all consumption will remain strong for the next couple of years while investment continues to lie low. That's about it from my side. Thank you.